How's it going, guys? My name is Jared Ace and welcome back to Met Eish. This is the July EasyEquities portfolio review where we're going to have a look at the portfolio and see how it has performed in the last month. And wow, what a year this month has been, both on and off the financial markets. It has been rough. We've been through a lot these past 30 days, some really low lows and some incredibly high highs. So let's have a look at it. But before we get into the video, please remember that this is not financial advice. I am not a financial advisor. This is a blank cup. Blank cups. Put your logo on my cup. My videos are meant for entertainment and education purposes only and should not be used as the basis for any investment or financial decisions. So, let's have a look at the portfolio. The total portfolio value at the end of July is 56,725 Rand, which is an increase of 4,012 Rand from June. And since we contribute 3,000 Rand a month, it means that we've made 1,012 Rand profit this month, which I am really happy about. The best performing stock this month, for the second month in a row, with a 14% increase, was Cloudflare. And the Mumish, also for the second month in a row, is Jumia. So not much has changed there. Now let's have a look at each account individually and see how well they performed, starting with the USA account. The USA account actually lost 0.8% this month, dropping from a total of $955 to $949, and a lot of that had to do with the fact that Jumia has just continued this downward march from its highs of last year. It's the only stock that we own in the US account that's actually worth less than when we bought into it 10 odd months ago. Other big news in the US account is that Nvidia had a 4-for-1 stock split this month. So for every 1 share investors held, they got an additional 3, while the share price was slashed to a quarter of its pre-split price. Basically what they did is they took the share price, divided it by 4, and gave you 3 extra shares so that you didn't lose anything. The market cap of the company stayed exactly the same. Basically, the board wanted a lower entry point of shares for new investors, which would be a lot less scary than the $800 per share that the share was at when the split happened. Now for the South African ZAR account. The ZAR account actually saw a gain of 1% this month, despite the fact that 2 of the holdings that were in the account took massive beatings in this last month. We also actually sold our first stock from the portfolio when we sold 100% of our stake in Naspers. Now, selling shares is not something that we look to do very often in this account, and I often say that when I go into buying a share, the holding period that I have in mind is forever, unless something fundamentally changes with the company. And I believe that in the last 2 weeks, a lot has fundamentally changed with Naspers, which is why we thought it was better to just sell out, but not exactly completely. If you take the Tencent holding out of Naspers and just look at the other companies that it holds, there's really not much there to get excited about, and Naspers is actually loss-making without Tencent. And since the Chinese government has decided to go on all-out war against its tech giants, I don't really want to hold this company anymore. The CCP has recently ordered Tencent to make some changes, which I think fundamentally changes Tencent as a company. And those are that they have ordered, because communist dictatorships don't ever ask for anything nicely, or at all, they've ordered Tencent to give up their exclusivity rights to certain record labels. They've also ordered the company to reassess how it does advertising on its platforms, and they have ordered Ant Financial and Tencent to assist the central government in making its own e-currency, which will effectively destroy Ant Financial and the financial part of Tencent in the future if they're successful in doing so, and since they're being ordered to do it by the government, there's really no room to fail. So they're being ordered to kill themselves, basically, and it leaves very little left in Tencent for me to get excited about. If you'd like to hear more of my thoughts on the e-yuan, comment down below. You might notice, however, that we still hold our Prosus holding. In fact, we actually doubled down on Prosus, and that is because when we invested in Naspers and Prosus, I couldn't decide which one would be better to hold, so I bought an equal amount of both. And since Naspers had only dropped 18% as opposed to Prosus's 30%, I sold out of Naspers and used that money to buy more shares in Prosus, which now makes this all seem very contradictory, but I'll explain why. I've cut down our risk in Prosus substantially, and since the price rose slightly, we are now sitting at -7% opposed to the 30% we were sitting at earlier this week. I still do not want to hold this company in the next 3 years, but selling out of our exposure to Naspers and all of the South African risk that it holds as well in all of its media holdings, as opposed to just having Prosus, is a pill that I can kind of stomach a little bit easier, even though I am still not happy and I don't trust the Communist government of China. This is not a position I see us holding in the portfolio in the next 3 years. And even though I went into buying both of them with the risks in mind, greed got the better of me and I wanted the growth and the money that Tencent offered instead of thinking about the risks, the massive risks that the government of China poses. I now am taking that risk far more seriously and am trying to reduce our exposure to China greatly, and will be watching Prosus very, very closely in the next few months. That being said, I don't think the government in China is going to get rid of Alibaba and Tencent completely, even though WeChat, which is the app driving most of Tencent's growth and business, has been suspended, meaning that no new accounts can be opened up until possibly the end of August. So even though they are reining these companies in to a great extent, further controlling what the Chinese citizens are allowed to see online and extending the Great Firewall of China, I don't think it's in the best interest of the Communist Party to do away with these companies completely. And now for the tax-free savings account. Our tax-free savings account has once again outperformed the other two accounts in the last month, growing 2.4%. And it's only natural that the tax-free savings account will grow at a faster rate than the other two, since that's where our focus is at the moment, and that's where we're putting all of our new contributions and a lot of our effort. The top performer for this month in the account was the Satrix Nasdaq 100 ETF, which grew at 5.8%, which was 1% higher than both of our S&P accounts. In other general portfolio news, we took in 60 Rand and 57 cents in dividends this month, most of which came from Signia's S&P 500 paying us dividends, which was great. It was so awesome to get that notification saying, hey, here's 33 Rand for your account, but not really, because we've reinvested it automatically. So it was just great to wake up to get that message. And it was just, it's great to get these dividends. They build up, they buy more into the portfolios that we've set up for them to buy into, and just nice to get that dividend snowball rolling. We're at a total of 217 Rands worth of dividends, which we have taken into the account in total, which, if you think about it over the whole year, is really not that much, but it is still very encouraging, and it's growing every month. Every time we get more dividends, it's just a bigger and a bigger amount. So it's really encouraging to see and just makes us want to go even further. Away from the portfolio, we have managed to cut our debt in half this month. So that is also really great. It's a real big boost to Mrs. Met Eish and I. And we're currently sitting at half the debt that we were at. So we're looking to, in the next 2 or 3 months, be completely debt-free. And then we can take all of that money and throw it into our investments, which will really see this account explode in value, and I'm really excited for that too. So that is a complete overview of the Met Eish EasyEquities portfolio and what we've done in July, a look at what we sold out of and why we sold out of it, and just a few ideas about the future prospects and some news in the account. So thank you so much for watching, guys. If you enjoyed the video, please remember to hit the like button, subscribe down below, and ring the notification bell to be updated anytime we upload new videos. You can also follow Met Eish on Instagram and Facebook and anywhere where Met Eishes are. And please remember tonight's sponsor, Blank Cups. Put your logo on my cup. For more information about Blank Cups, email moneymeteish@gmail.com. Thank you so much for watching, and good night.